the the issue also, however, is the spending, the irresponsible spending. I'll give you an example. So we took in 30 billion in tariff revenue um, in August, right? And yet the government reported a $345 billion deficit in the month of August. And inflation hit its highest rate since January. So when you talk about money coming into the country, sure, that's fantastic. And that is what we need. We need to bring manufacturing back and investment back into this country. Um,
Well, and he's
I
also
just think,
talking the 17 trillion is, I'm going to break this down for people. A lot of that money is coming from tariffs. It's not just from whatever, from an actual investment from a corporation or something. It's also tariff investments. That's what he's
yeah,
characterizing as investment.
usually tariffs go to it's a tax on the consumer because, if a business is, if a corporation in another country like India is being taxed at 50%, you can't sell your product at a 50% tax. No one's got those kind of margins. So they pass the increase in price on to the end user. To me, it all boils down to more than anything, it boils down to fiscal irresponsibility. You can bring in all this money in tariffs, but if you don't get your spending in order, it's never going to fix anything. And this all goes into what I've been talking with you about that I believe in my soul, you know, just on the very premise that we've talked about, I believe gold will be repegged to the monetary system,
Mhm.
backing the back end of the bond market. We've talked a lot about that. And when you look at what Tether has been doing lately, Tether being one of the biggest holders of US treasuries, they will issue all the US dollar based stable coins, or they are huge in it. So every time a stable coin is issued, they're backing it originally with US treasuries and dollars, but now they're taking a massive position not only in physical gold, but also in gold mining. They were just at the big precious metals conference in Beaver Creek, and they are going directly to the miners to have big investments in the gold miners. So think about the three things that they're buying when you create that. So these stable coins, the interest that comes off the treasuries that are backing the stable coins, the consumer doesn't get. Tether does. All of that profit they are taking and they are buying Bitcoin and they're buying gold and now gold mining. So think about what the three do. Buying the synthetic demand for U.S. Treasuries through all these stablecoins and the Genius Act will push interest rates low on the front end of the curve. That's exactly what they want. Taking the interest that is not given to the people who own the stablecoins, but is given to Tether, they will buy gold and Bitcoin with it. Both will go massively higher, which does what? It devalues the dollar. They want to devalue dollar. Stephen Murin, who took over for that spot in the Federal Reserve, who was just confirmed, he's going to stay there longer. He is the architect of the Mar-a-Lago Accord. The whole thing is about devaluing the dollar. All this investment coming into the country, he wants manufacturing back. So the last piece of the puzzle is letting gold go much higher, pegging it to the back end of the bond market with zero coupon, no interest, so that they can take gold backing it instead and bring back manufacturing at a zero borrowing cost at a wickedly devalued dollar. Now you might have a chance to grow your way out of this problem. And by the way, I do believe gold has a floor underneath it now by the U.S. government and by all the central banks, and I would now say the same thing about silver and platinum. Why would I say that? Because the U.S. government has reclassified them both as critical minerals, and the U.S. government is in talks right now. Let me see the name of the company. They are in
Interesting.
talks right now with. I was just reading it today, so they are in a talk with a company called, bear with me one second, they're called Orion Resources, Orion Resource Partners. The government is in talks with them, U.S. government, to set up a multi-billion-dollar fund to invest in critical minerals mining project. What is known, the U.S. Internal Development Finance Corporation, DFC, is in negotiations with Orion Resources to create a $5 billion fund for critical minerals project. The U.S. aims to secure supplies of minerals like cobalt, copper, silver, rare earths, etc., which are essential for defense, advanced tech, and reducing dependency on foreign supply chains. So again, when you talk about now silver and platinum being added to the critical minerals list, you have massive investment coming in. And at some point, you're going to see the industrials like Tesla battle the investors like hedge funds and now the US government to get supply, and they're going to be fighting to get supply in what is a diminishing product. Silver is diminishing in nature. That's why it went from 16 to 1 for 5,000 years to now 7 to 1.
How long can they keep that price down? Because
it's
forever.
already
I mean,
changing.
it is.
No,
Okay,
you
so
cannot.
like
It's changing.
I happened to buy silver. I'm not going to sell. I just started buying slowly back in 2010. It dipped all the way to $10 an ounce
Right,
back then.
right,
Now it's what, at 35, 40?
right. It is, and it's at 42. Futures are very close to 43. But the reason they can't do it indefinitely, Sarah, is because the market has caught on to them. And the big money in the rest of the world, in particular in the BRICS countries, has figured it out and is standing for delivery across the board. I'm going to read to you a couple of things here that might help explain just how crazy it really is right now with in London and the LBMA right now. So far, well, let's say so far there has been in the month of August, 58 since late August rather in September for the September contract. So far, about 60 million ounces has been delivered of silver, 10,550 tons year to date. In London, where it is known as the global delivery mechanism, they have they're trading minimum of 600 million ounces of silver per day. They have standing contracts of about 2 million ounces in paper claims, yet they only have an available float, as they call it, the bars that are available backing these claims of 140 million ounces. In other words, there's virtually no free silver left to meet demand in London. And so
That's
what
why
we
they
are
had to
seeing,
reclassify it as precious
yes,
mineral
as
because they need
critical.
it. Yeah, or
And it's
critical
up
mineral.
43% this year. But here's a couple other things that are crazy that signal how close this is to breaking free. And this was an article that I read in Bloomberg, and they're confirming that the London 1 year implied silver lease rate is between 5 and 6.4%. Now, the lease rate would be if you want to short something, you have to lease or borrow the silver, or in a stock, you borrow the stock and you naked short it. Stock you don't own, you borrow it at a lease rate. Now, normally, or if you have to cover and you don't have the metal, you can lease it and borrow it, cover it, and then pay them back. But the point of it is that over the past 2 decades that I've been 3 decades, I've been doing this 1 month, 3 month, 6 month, and year lease rates on silver are typically well under 1%, a half of 1% or better. And even in really crazy times, it barely gets above 1% and usually only briefly. Right now, they're as high as 6.4%. And this indicates massive tightness in available supplies. It means that the holders of silver are demanding unusually high compensation to part with their metal, even temporarily. And to your point, how long can they do it? These paper claims are crumbling. And the big industrials, the sovereign funds, the retail investors are all scrambling for more silver. And when you add it to the strategic minerals list, that means, and add it to the deliverable silver in London vanishing, if investor needs and industrial demands collide, which I believe they will, and you put a floor underneath it because the US government is buying it, you're talking massive, 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 massive upside potential. Now, one last thing I'd like to say about technical analysis. We are at the tip of a 45-year cup and handle pattern. It's you got the cup, the dip to the handle, and then, so anyways, this 45-year cup and handle pattern, it's the most powerful technical setup you can find in markets. And in particular on such a long, long time frame, and it carries huge implications. It basically says that 45 years of suppressed energy is about to be released, coiled like a spring. And here's how it works. If you take the cup, which is the top of the cup, in silver's case, you could call it the 1980 peak of $50. Through the decades of consolidation, the handle is the pullback and the tightening range. That would be since 2011. But once the price breaks out above the rim of the cup, which would be above $50, the pattern signals a massive new secular bull market. And the way that you calculate where you would expect it to go
Yeah.
next is that the rule is you take the top of the cup at 50 and then the depth down to about $4 in the early 90s, even a little bit less. That's $46 difference from 50 to 4. You add which is 46. So you add 50 plus the dip, 46, you get between 90 and $100 would be your initial target, $96. That is technical charting right there. It doesn't get bigger than that. So, you put all of this together, massive imports into the United States, like no one's ever seen this amount ever. Huge delivery problems in London, massive rehypothecation in London, 2 billion ounces in contracts that could stand for delivery with 140 million ounces available. What could go wrong? 6% plus lease rates. They're always about 12 to 15 times lower than that. I mean, the whole thing. And then now a critical minerals list. It's telling you that there is a floor under silver and that the upside is extraordinary. And you look at gold being everything that I see tells me it's being pegged to a new monetary system, and Tether showing up at this big meeting in Beaver Creek. They asked me to come, but I had other obligations, and I would have loved to go speak there because you have the very
Yeah.
very
Yeah.
inside information going on there about gold. But when Tether is there going directly to the miners to talk to them, it supports everything that I am thinking, that they want a weak dollar. And if you have a weak dollar, you have Tether buying interest rates or buying treasuries, which lowers interest rates, right? And strengthens the bond market. And then they put the proceeds into gold and Bitcoin. It lowers the dollar, but it pushes those two things up, which they want a strategic Bitcoin reserve. They've told us that 100 times. And they want gold back in the back of the treasury, 10, the 30, and the 10, 20, 30, and ultimately a 50-year treasury, all redeemable in gold. Everything is coming together, Sarah. And the moral of the story is you stay in dollars, you're destined to go broke. I am 1,000% positive of that. I don't care what you want to put, what asset you want to choose, but being in dollars right now, they're telling you they want to devalue dollar, and you're going to see it. And one last thing about gold, Goldman Sachs came out and said, well, if the market even believes for a second that the Fed has lost its independence, gold will go to 5,000. Well, Stephen Mirren is still an advisor to Trump and working on the Fed, and he is the advocate of or the author of the Mar-a-Lago Accord.